the first debt-free asset that we're going to discuss is Cove Eastwood Village Opportunity 71 DST. This is an opportunity at the shopping center in Birmingham, Alabama. It's very interesting because it's the #1 retail center in the market in Birmingham. It's on one of the main thoroughfares of traffic, and they, at this center and at this village that our real estate sits on, there's over 3.4 million annual visits. And for those of you that are not familiar, that's a lot of visits for a retail center. This is what we believe a Class A shopping center, and very unique to the demographic, to the city, to the immediate thoroughfare. And whenever you're dealing with retail, it's very important that you have access to consumers. It's very important that you have traffic counts, visitation, supporting tenants, complementing tenants in your center and your surrounding, maybe other real estate, your neighboring real estate is supporting of what you might have on your piece of real estate. And so this is what we believe this whole little thoroughfare, kind of recession resistant retail, discount retail. So historically it's done very well, but these types of tenants, these discount retailers, have done well through situations like 2008, through COVID, through times of today where things are getting more difficult for a consumer. And so this center has 2.3 million square feet of retail. It's multi-tenant. We like that multi-tenant because it creates a staggered lease situation. So we don't have, all of our tenants' leases coming due at the same time. It insulates and creates still a durable income stream potential for our investors. The other important thing on an asset like this is the way we buy it. And we bought this well below replacement cost. So our basis going in is very unique. And this was a situation where we believe there was a seller that had a loan coming due. They had owned it, enough to where they were in a good position to exit, but they were exiting at the wrong time, in a market where there was historically high interest rate hikes. And so this was a good time to be a buyer of an asset like this versus if you were selling this asset a couple years ago, it might have been a much better outcome for the seller of this asset. And as you guys know, there's a couple things that create value in any piece of real estate. It's that underlying tenant, the quality of that tenant, and what their rent is, and then also what is their lease. And so as we extend leases, get longer terms, get more attractive leases, and that could be from negotiating, triple net leases to make more expense burden on the tenant where appropriate, which obviously falls to the bottom line of the net operating income. And then in commercial real estate, as you get longer, if you can convert a 1-year lease, a 2-year lease to a 5-year, a 7-year, a 10-year lease, that brings potential inherent value to the asset because it makes it a much more financeable asset to the exit buyer.